Hello, everybody. Welcome to the close, obviously, where we like to talk about what's going on in the markets right now, coming into the close, talking about the indices, talking about the stocks out there, talking about those cryptocurrencies. Whoo, Bitcoin. Come on now. Slow down, Bitcoin. Slow down. You're going too good. But today, buy the dip was in full force. And we've got some great stats to be coming at you with. I think you'll be very interested to see some of the options trades, some of the traps that obviously Wall Street plays for the retail herded mindset. And you might be very interested to know how many puts were really put into the market today, even though it was bullish. It's amazing to always see how the manipulation occurs. Good morning, good afternoon, and good evening to people around the world. Obviously, in the US, the best market in the world, we are seeing the close happening in half an hour. Great to have you here. Thank you very much to the hundreds and hundreds of people that are joining us. We do appreciate it. So, look, just firstly, because we're starting the stream here, I just want to quickly talk about this Nasdaq. We've got the fake market futures up here, and I just want to talk about this little trend line. I think there are going to be some profit takers here today. We had our suspicions yesterday at the close when we closed around that 4,300 that it was not bearish enough. It turned out that that was correct. We ended up moving up through the futures trading session. You'll notice here a series of higher lows coming through. It snapped off that 14,576 previous support and ran straight into this trend line here. And this trend line will act as like a profit taker. If I was trading the market today and I was looking at this and I was thinking, into the close, we've had some bearishness. We're still in a lot of volatility. We still have uncertainty across all of the same problems that we had really over the last week. Would I be potentially going, maybe some profit should be taken? Well, I think there are some very good signs for that to come. Plus, you've always got to think about, well, what's my worst case scenario? If the market does continue to go up, when will I get another opportunity to potentially be in? Remember, investing and trading, guys, is a very different thing. Here we have a bit of a double bottom that could be forming here on the 1 hour. This is the S&P 500. You'll see the support. You'll see again the 4280 into 4300. We closed above that zone we discussed at the close yesterday, and that has rallied back up. Where are we now? Guess what? We're at resistance. It's very easy to see it. And this is exactly why we do the close sessions, because we want to understand what happened during this session and then what's most likely going to occur over the futures market. So that's the Asian session coming into the European session, and then where we'll be at the open. Let's take it over to the community. What do you expect, community? Do you expect it to break through and go higher? Are you bullish or bearish from the close into the next open? Tell us right now. I'll have a bit of a coffee because I actually quite enjoy the mornings. It's fantastic. Remember, over here in Australia, it's about 6:30 in the morning. So it's it's a totally different time. This is where I prefer actually to trade. And it's mostly because this is where you can place your longer positions. We haven't seen it yet on these streams, but what you're going to sometimes find is we're going to come in and we'll have certain stocks, and certain stocks will be breaking through these types of sessions at near the close where we'll have rejection, and we'll have that bullish closure. And we will know with greater certainty that this is the real deal. And guess what? Between the close and the open the next day, what happens? It tends to gap up or move very heavily. And unfortunately, the trader that isn't realizing this at the close, they miss out on that opportunity. So I'm sure we'll see that plenty of times over the next coming months and weeks as we do these. That's what's up. All right, let's see what everybody is saying here. So bearish. Oh, everyone's bearish. That's usually terrifying. Either we've got a smart community or it goes and does the other thing. Yes, this is exactly the type of period that most people will be going bearish. But I want to put a couple of things in perspective. Firstly, the correction so far in the Nasdaq anyway has actually hit, remember, 8%. And in our shallow pullbacks, that's all you get. So from an investment standpoint, being, having a plan would have been you might have already started entering your positions with your expectation of worst case scenario being 12% from a standard corrective period. And we've talked about this a lot. 8 to 12% is usually all you get in a correction. We also talked about the strength of the market. So that's the investment side. But what I want to show you now is the options, because it's too hilarious. I just took it before. So here are the options from yesterday. This is the previous session. You'll notice in the video we covered this. And wait, this is not the one. There it is. There's the one from the previous session. Damn, I've already shown what I was going to say. So we had the 420 and of course the 440 being the put wall over here. So this is the put wall where we don't expect the market to be under by the end of the week. And then we had the call wall, which is around 440 on the SPY. And that's where we don't expect the market to be above. So in an ideal world, you would obviously be trapped within this range. And if you did get above or below these kind of put walls or call walls in a significant way, then that can really mean there's some anomaly occurring. And someone messaged me before about Netflix, and we'll talk about that soon because Netflix has been a stellar result today. And we have been incredibly bullish on it here. Have we been bullish, guys? Yes. Why? Because it's good technical analysis. And it was one of the charts that we've been looking at, just going, yes, we like it. Yes, we like it. Yes, we like it. And it's almost hit exactly where we thought it would go. So we've trapped in this range. Then we go and we have a look at this session. Now you would think, hey, the market's gone up today, Tom, and we've seen the market basically do a rebound of what it lost on Monday. Yet, guess what happened, guys? The put wall got bigger. Look at this. All of the options that were opened, everyone started opening puts on the 420, yet the 440 has not actually risen as much as you think. So while it's still perfect for them to close it in here, we've got a really good big put wall here, and you can show and very easily see how Wall Street's manipulating the psychology. A lot of people are bearish right now. We've talked about how we don't expect this to be an absolute epic collapse of the markets. And we've also talked about how we thought we'd be trapped in this range earlier in the week. And this is the importance of it, because once you understand that you might be trapped within a range, then you won't necessarily place reckless options in stupid positions. And a lot of people have obviously opted with the idea of extreme fear outside of this community, I'm sure. And they've started opening up 420 puts. And 420 puts, I believe, are a mistake, because how well can they be paid by the time Friday comes around, the 8th of October? It makes no sense. This is a stupid idea. Don't be stupid like everybody else. Don't be the sheeple. We want to be the fox or the wolf. You know, we don't want to be the sheeple. So very much this is a fantastic zone to be in, trapped here this week, and we'll talk about it in a second. $77 coming in with the $4 super sticker for the coffee. I've got it, Sandollar. Thank you very much, sir. Been a long time supporter. It's great. Marvin the Martian says, someone getting a lot of premium out of all these puts. Yeah. Me. That's who all the sell puts that have got proper risk management, they're the people that are making the money. Hey, all I'm showing you guys is that the manipulation can be seen, but it's actually just a giant game. And yes, there's going to be times that it doesn't exactly work out, but statistically, hopefully over the last month, you've really seen, especially during this higher volatile times, while the market's been pulling back, you've really seen these walls show themselves where you've had levels and you haven't broken through those levels. And that's really important to just realize that happens in the market. So we've hit the resistance for the day. I don't believe that we can get through here by the market close. I would be very surprised to get through such a resistance. Here's again the Nasdaq. Here's the S&P 500 at the resistance. Now, if we open tomorrow, let's say the next session kind of bulls up here and we open above, I want to just talk about that scenario. So let's say we're up above this scenario. We come in, Asian, European sessions have been bullish. I don't know if I'd buy straight away in the day, but I certainly would wait for a pullback back to this zone and look for a reload to go long. And I think we're at one of those critical points in the markets where, are we out of the bearishness yet? No. But if we did close above this 4380 area, 4370, 4380, is that a big deal for the market to the bull side? Yes, because it's always an optimistic beast. And really what we're telling the market, or what the market's telling us, is that we tricked you. We thought we'd go further. You thought we'd go further. And we've just basically said, no, 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 no. That's all you're going to get. We're moving forward. We go towards the 4,400. And once we get through the 4,400, obviously we go to that 4,460, 4,450 area. And once we get through that, There ain't no more bear in the market. It's bull, 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 bull city. So we're trapped in another range. We're a range within a range. And that's why we say if you're going to be day trading right now or you're trading in general, you've got to be nimble and you've got to be quick, because this is exactly what happens. Buy, sell, buy. Guess what? The most likely scenario is actually a bit of sell. If we do close above, we've got to recognize that 4,400, a problem for the next session. And then after that, freedom basically into that 4,460 area. So we've got some really good bull case scenarios. Where the bears really take control is underneath a 4,300 close. So if we have a look at the SPX, I'm not really hugely feeling the bear until we actually get underneath on the daily, not on the 4 hour. Remember, the daily is the key here. I want to be underneath 4,300. And unless we're underneath 4,300, the bears are not allowed to really jump around and go crazy. If it did happen, oh, sure. Then we're talking really serious pullbacks. We're talking possibilities of 4,050, 4,100. At that point, we hit the weekly 50 exponential. And I think that's all there is. After that, you're starting to talk about an actual collapse. You don't really want it underneath this level. We've already demonstrated how rare they are in a massive bull pattern throughout the GFC from the global financial crisis on. Look at the 50. The 50 once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, 7, 8, 9, 10 times. Only twice did it get through all the way from 2012 on. Only twice. So that's how rare it is. That's multiple years, 2012 to 2020, 8 years, and only 2 pullbacks were underneath the 50. In fact, probably 20 of them hit the mean reversion of the 20 weekly. So it just shows you that when you're buying dips, when you want to be a bear in the markets, you've got to be fast, you've got to be quick, and you really need to realize that being an optimist in these markets, unfortunately, if you are a bear, get out of the mindset. The mindset has to be optimistic whenever possible. Finkin79 says Tom's a closet bear. If you're a closet bear, then you're always negative. Look, obviously on YouTube, it pays to be talking about the market pullbacks, and there is, of course, always those risks in the market, but actually it pays to be an optimistic bull. You're always wanting to be long. You've got an investment portfolio, and then you've got your trade portfolio. They're separate things. So to call me a closet bear is wrong, Finken, because realistically, the way that you want to be doing things is always looking for opportunity. Twice a year, you'll get these pullbacks. So from that aspect, yes, I prefer to buy the pullback than anything else. But overall, you have to hold long. Nothing you can do. PK Subban says, wow, net up 8%. That's pretty damn phenomenal, actually. 8% is pretty good. And David G, Australian $5. Hey, Tom, like in the morning stream, half an hour earlier would be better. Could you check REGI, REGI, please? Yeah, sure. We can have a look at that. REGI, and then we'll go into some of our normal stocks. Burak says, do you believe the correction is over? I believe that the Nasdaq hit an incredible level, and I believe that for me, that was a level that it was investable. Do I think that it's over? 43. No, I can't call it. It's too early. Too early. You've only seen one rebound day. You don't have that technical double bottoming that I like to see. We might discuss that in a second. It's one bullish day after a bearish day means nothing to me. It's more once you break through, you've got to get back involved. Would I have been looking at the Nasdaq yesterday from an investable standpoint? Yes, I do think it's a first level. Remember, have I been incredibly consistent with saying 8%? I say 8 to 10%. I said it a month ago. I say it now. I say it in a week's time. It's always the same. I just play the averages. When you're investing, you're playing averages. It's like dollar cost averaging, but quality, not crap. I don't want to see any more SAVAs out there. Hate those things. Oh, well, not necessarily SAVA, you know what I mean? Like, get out of the mindset of crap, guys, and look for quality. So this REGI thing, REGI, which is a chemical specialty company. Actually looks decent. Let's take a look at the weekly again. So the weekly here, some bearish looking wicks. So you got the rejection, rejection, rejection. Then you've got a bullish close. Fantastic. Exactly what you want. Do have a bit of problems around 55, which is up and coming. The 20 is here. It's pulled back fairly hard, which is, again, probably not a bad thing. And it looks like it's making a series of higher lows. So you can probably do a few things with this. One, you can really move out here and talk about that level. Then you can also talk about the fact that you've just closed above, or you've got a long leg doji here, 4 hour, with the potential of a nice bullish breakout. This is a solid chart. I think you've got some small issues coming up around this area here, maybe even this 57. But overall, this is looking like a bullish kind of accumulating stock that's moving in the right direction. This closure here today is a pretty big deal. And yeah, it looks good. So if I was trading this, let's say, I would already probably be scaled in around here. I'd be scaling in around here from, purely hypothetical standpoint. And then we'd be moving towards that $60 and $57 to $60 on the 4 hour. Looks okay. Looks not bad. So yeah, to call the correction over after one bullish day is too early. Too early. Chris Smith says confirmation bias. If you're a bear, negative is easier than positive, but then you lose. Pretty much, yes. Positive, look, it's not hard to be a longer term investor from the perspective of you can buy quality, and as long as you pick like a nice broad range, you'll generally do okay. However, when you're trying to start to make more money or potentially figure out maybe we can use deleveraging, leveraging, and dip purchasing and dollar cost averaging, all these other strategies, that's when it pays to know that they're corrections per year. Is it time to double down up on Chewy? Well, I'm never going to tell you to do anything like such a thing. Why would I say such a thing, Scott? But we'll have a look at Chewy. Chewy is actually even lower than I guess we thought it would get to. We thought around this level, didn't we? 65. Oh, it doesn't look good, man. Doesn't look good. I mean, yes, it's the low. This company obviously came out of nowhere. And I think this is what's happening to a few hyper stocks. Anything that's dropped its great potential growth is really getting punished through. Look, it's around the right area, but to buy here would be a mistake in almost every arm. Like if you're just buying a dip for investment purposes and you've done your fundamental research and you're looking for a good support, yeah, it's an area. But you know what I'm going to say. I'm going to say that you want to see turnaround. You want to see accumulation. From a trade perspective, that is a nightmare waiting to happen. You would never buy that based on a trade. And if you do, you will blow your account 20,000 times over. And I'll see you in a few years when you realize that. That's the unfortunate thing that does occur. Because buying these types of falling knives or buying these pullbacks, you will get it wrong. You might get it wrong. You might get it right 3 or 4 times. So the time you get it wrong, you're going to get stuck in the stock. You're going to be sitting there in 10 years. Let's get a veteran in here in the chat. Veterans in the chat, tell everybody that's the truth. And that's what happens. And it sucks. It sucks. But you got to learn that picking up these levels is an investment, sure. As a trade, disastrous. Anna Robertson Miller becoming a new member. Thank you so much, Anna. Appreciate your support of the channel and welcome to the membership. So we've got about 11 minutes here till the close. And I want to talk about a couple of stocks that are closing pretty aggressively. I also want to talk about this US 10-year because all of a sudden it's rearing. Now, US 10-year, look at this. This is the concern here, guys. Remember, we've talked about the US 10-year. It came down to our 38.2 fib. So let's get rid of this fib because we don't need to talk about the fib no more. And this is another reason that I would be skeptical, let's say, about that current rally today going to a resistance. We've got no confirmation here. We've got no bias. We know the market was bullish. We know the market's got to a technical resistance on the smaller timeframes. We also know it's optimistically long all the time. But we do have this 10-year coming up to an important area. So we've got the support becoming the resistance, and it's just suddenly started ramping. So look at this. It's up 3.31%. Let's just quickly go down to the 5-minute chart here. So let's have a look at the 5-minute chart. Here we are, 5-minute chart, some decent ramp just recently. Let's go to the hour so we can get a bit of understanding. There it is. So it's come up just in the last couple of hours during the market session. So it hasn't scared the market off this bullishness yet. But remember, if the 10-year is allowed to get to a new high, which based on those higher timeframes, based on something like a 4-hour chart, you would think that's what it's looking for. I mean, it's pulled back and it's moving up. I mean, this is the type of thing where you expect it to break out. If it does break out, where's the next zone? Hey, it's a 1.7. If we get a breakout of the 10-year, what do we know that's synonymous with? Chat, tell us right now. What happens if the US 10-year gets through 1.55? Thank you as well to the 700 people joining us here for the close. Appreciate you guys. If you smash a like button, it will help us out. And we'll look at crypto in just a few seconds as well. We certainly will. $7.77 says that's just the facts. Boost Holic says he ain't lying. And then Alex B said, I lost $7,500 on that. You can read the chat here, guys. If you buy the dip and you're investing and you're buying a quality, you can buy those zones, okay? You can buy the heavy supports. You can bring an option strategy into it, etc. But if you buy them for trades, you will get destroyed like Barber. Destroyed like Barber. Tech goes down, Nasdaq crashes. Yes, that's correct. QQQ takes a dive. That's right. So if the US 10-year bounces through this zone, this will be the thing that we want to watch here over the next 24 to 48 hours. Remember, we're in non-farm payrolls week. We're at a resistance. The US 100 already showing signs a little bit here of a bit of profit taking. We've shown you why it's a key zone. US 500, we've shown you why it's a key zone. It hit resistance. It's not rocket science. It's a damn good resistance. It's a beautiful looking double bottom that some people could be looking at, or I'll look at it as a channel. And if it breaks out here, because we've got two touches both sides, so we've got 1, 1, 2, 2. So really, if it breaks out, sure, we can go bullish. 44 is a bit of an issue, but then we're going bullish towards that 44.50. And if we take the distance, hey, look at this. It proves pretty well. So it's also a very solid type of thing. But we can also go, okay, well, what if it comes back down to this support? What if it breaks through that 42.80 and we get the low close under 4,300? Well, guess where it pushes to, guys? 4,200, basically. Look. So we go from that level here. Remember, this is the futures market. So the real market trap is about there. And it pushes directly to the 42. Now, what do we know? If it closed underneath, where are all the puts? They're at 42. It's very unlikely to get under that put floor. And what we'll now start to do over the next week, over this week here in the videos and the daily recaps, is we're going to look at the puts specifically coming into the week after, being that week of the 15th, which is the most important, of course, options expiry for the month. And we'll be watching that like a hawk to see where all the puts and the calls are. I'll bring the data on it right now. So 10-year, watching that. Resistance, watching this. A super key level on the US 500. I would be like laser eye focused on this thing. US 100, we have that trend line that we've been following here on the way down. If you've been in today bullish, congratulations to you. If you were day trading, congratulations to you. If you were scaling out here, I don't blame you. Obviously, you make your own decisions and do whatever you need to do. But yeah, I mean, fantastic stuff, guys. You got big brain. We talked about it yesterday on the close. And just like we talked about it yesterday on the close, we're talking about, the exact same thing. We still have these ridiculous 450 calls out till the 15th of October. We do have a decent amount of puts. I'll be very much focused on how do these puts change as we get closer to non-farm payrolls and closer to the end of the week. Do we see further spike pickups? Do we see that 420 become insanely high and then have a trap zone? 420 may therefore be the lowest point we even get in the market. Maybe we've already seen it. but we'll be watching that. Let's take a look at Apple here into close. Another one that was at previous support becomes resistance. Fantastic. Very, very good. Exactly where you expect it to have problems. That 142, previous support, resistance, trend line down. It looks just like the Nasdaq. It is exactly the same thing. Again, day traders that are looking at this, they're probably just going, you know what? I just kicked some ass today. I'm a beast. I made 2% on Apple at the peak. I'm going to take some profit and then move on to the next one. Let's go through some of these stocks. So it's green across the board. Everything's great. Some of these price elasticity things are doing well. So stuff like NVDA had a big rally here. Again, why is that selling off, guys? Where was our previous? Look at this. Where was our previous resistance? Right here at 207. Where does it get close to? 207. Why is it selling off? Because it's back at the resistance. It's the role reversal. Previous resistance becomes support. It has a problem there. There are some outliers. I mean, Netflix is just phenomenal. Look at this. I hope someone's in Netflix. Is anyone in Netflix long? Because congrats to you. You're kick ass. Well done to you. Recognizing an incredible channel breakout. This one had all the big traps in it originally as well. And you know the big difference here? And this comes down to experience in the markets, guys. Go to the top-down approach. Weekly closure breakout. Oh, I love it. Go Netflix. I don't even like your service, but well done. Good work. You broke out of the channel and the weekly confirmed. This was a hideous Wyckoff demon that actually came out and it full on trapped people. The closure did not confirm on the higher time frame. Over here it did. We got the pullback. You got the beautiful entry and now it's moving on up. And then of course you look at it and you say, well, what's your expectation here? And our expectation is this. We hope that it goes this distance. Is it getting there? Sure. I actually hoped it would go to about 640, 650. That was my aim because I was not being so greedy. But for a lot of people, it's going to be around this 666, the devil itself. That's going to be it. Is anyone in this one? Anyone in this one? Netflix is mad. Thank you for 800 people as well. Appreciate you guys. Sprocket, $5 super sticker. Thank you very much, Sprocket. No message, but appreciate your support as per usual. Very cool. Sold yours today. Don't blame you, lunch money. 640 is a decent target here. But look, great. I mean, it's just so good. Bullish, bullish, bullish. Bam. Like smashes that high. I mean, the whole market's been negative, but this thing's just been bulling out. And it's the same thing when we go through some other stocks. I mean, let's have a look at Amazon here. You know, Amazon's relatively weak, but you can imagine some of the powerhouse plays that could come up in the future when you look at this chart. You've got here support. You obviously have huge support around 3,000 or 2,900. And if you break through this point here, which is 35.50, let's call it 35.50, 3,500 on the weekly, that will create a giant double bottom. The rest of the market will be double bottoming as well. Into November, let's say, wow, it's going to smash new all-time highs. Remember, this thing sucks. It's been trapped for a long time, and it has a lot of the tendencies that Netflix had as well in terms of the problems with the chart since July last year. So that'll be one to watch. Are there any other stocks? Do you guys have any stocks that you're seeing as breakouts today? I'm kind of neutralized into the market. I feel like we just hit a resistance, so I'm not looking at too many longs into the close here, but I'd be interested to have anybody else's opinion on what they're looking at. This was net, what people were talking about. Good price elasticity proves the rule of the market pulls back. Which one comes back the fastest? The stocks that were already hot coming into the correction. Remember, you don't go and buy the crappy stock. You always buy the better one. And if some people have been looking at Snap, you know, this had that price movement up on it as well. You know, Snap was a fantastic purchase. It may only be 3% today, but it's another very strong position here with very strong support. And if it gets back through 76, guess what? That's a very aggressive one. We'll watch this on the close. I'll be watching Snap at 76. I'll put a line right there right now. Bam. Because if it gets back above 76, considering where it's been recently, considering the earnings, I don't want to take it into earnings, but considering the earnings, it could have a nice ramp. All right, let's have a look at the crypto. And we're just closed. 1 second. Let me get the indices up and then we'll do crypto. So US 500 closes slightly down. Let's have a look at the SPX. So SPX closes 43.45 and the US 100 closes at 14,671, it looks like. Let's have a look at the NDX. There it is. So we look at this in its entirety. Does that look like a market that you go, oh, yes, the end? Like just purely technical, I don't want to bring any other, bias in on it. Do you think that looks bullish at this stage? Or is it too early to tell? Tell us, chart. Mo Park says a lot of selling into the close. We'll do US oil in just a second. Don't worry, Marvin the Martian. We'll check out US oil. I do love US oil. 10-year yield, Miss Sale, is basically just the expectation of where interest rates will be in 10 years. And it's obviously an ongoing thing. So basically, the 10-year yield being at we know interest rates are not currently at 1.5%. It's the expectation in 10 years. Too early? Too early. Not bullish. Too early. Correct. It's too early. Look, I wish that you could always say, oh, hey, every day you'll know exactly what's going on. But if I was looking at this market, I would say support, and then the market's closed below and it's just come back to test that support as resistance. It's a classic role reversal kind of opportunity. When you look over here at the SPX, this 40, look at this, 43.80, 43.75. What the hell is this? Rejection, 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 and then it sells off. I mean, great sell. Congratulations. If you recognize that, you got a big brain. But guess what? Just like any stock, if we were looking at this chart and we saw a closure above here and it snaps off all those previous resistances, you bet your bottom dollar we're going to be like, hell yeah, let's go fill that gap. It's gap fill time. Absolutely. That's exactly where we're going to look at it. And if it closes above, we will look to fill the gap, just like smart big brain traders do, because you don't have the bias. Your bias right now is, the market overall is, I guess, slightly bearish, but really we're always optimistic. So let's call it neutralized. Trade what you see. Don't trade your opinion. Kevin says SPY and QQQ tested their hourly 50s and got rejected. Needs a couple of days to more bullishness. It probably just needs to get above here. Get that little kind of base formation happening, and then we can go to move the gap. And at that point, yes, you're looking at a lot more bullishness. This is the standard, 2 steps down, up, down, up kind of movement. Also, if we take the range here, remember, if we took that full distance down and then extrapolated that out again, remember it did exactly the same leg. So what actually sometimes makes sense is it pulls back around the same as well. So that scenario is around that 15,000, 14,900 if it did pull back. This is a good point, though, for people to take profit. And I don't blame them for doing it today. So Apple did sell off into the close. Square obviously came back to exactly the same area. Previous support becoming resistance. Amazon weaker overall in the session. Google, very similar. Previous support became resistance. It's the same thing because the indices are going to show these big stocks. And almost every one of the stocks is very similar, except for my Intel, which is just doing nothing. Now, you may look at this chart and you may say, Tom, why do you even care about Intel? Are you dumb? This stock sucks. Intel sucks. Everything about it sucks. Yeah, sure, it sucks and it's not doing very well. But remember, there's even a trapped market you can make money from. So if a market you believe is basing, and it's basically formed an area where you think it's more likely neutral or bullish. So let's say you think it's neutral or bullish. A traditional brand new trader into the market or investor will think instantly, oh, well, that's a pointless, there's no opportunity. It's not going up. But somebody that understands different ways of making money will look at a neutral to bullish market and then say, okay, I can actually, if this did nothing, I'd be very, very happy with it. And of course, you might be able to figure out why due to options and other reasons. Slobodan says Intel will bounce back heavily. Yeah, look, I mean, I think it's got a great November seasonal with it. We'll be talking about the seasonal percentages moving up. Still a little bit early here, but there are ways to profit from a very boring looking chart. And one of those ways is, of course, using options. And you'll notice when you're looking at this very boring looking chart, like even the weekly, check out this. I mean, this is the most convoluted amount of indecision ever. You've got rejection, long leg doji, bullishness, long leg doji. None of them are closed either way because remember, it came gapped underneath and came back. So imagine if we get a closure above 55. What is this telling us? All of these, this sell, this long leg doji have all been snapped, and then we start to move up. Now, I would be very happy with that, but I'm also happy with it doing nothing. It's just, again, it's multiple ways to look at blue chip stocks. And I think I'd encourage a lot of traders and investors out there, stop hunting. In the next couple of years, you're going to want to stop hunting weird penny stocks and those things that are all these like FOMO bull plays. And if you want to stay in the game longer, you want to go back to basics, back to quality, and figure out different ways of making good money off it. All right, let's have a look at US oil because we love US oil at the moment. Amazing rallies, big movement here. It's continued its bullishness. Of course, it got through 77 or 76.50. We knew that was a big deal. We do have our long-term goal here for the long-term goals here for US oil are these two zones. So I'll show you them. So I have my goal set to 85 and 92. I am bullish it. I would not mind if it comes back down and tests this 77 just to allow me to get further entries. But yes, I believe it's something around $85 on US oil. And overall, it looks fantastic. There's absolutely nothing wrong with this chart. It's very bullish, possibly a little bullish, too bullish right now, but very, very aggressive. So good. Matthew Harris says Apple was 2% of Intel's revenue, but dropped 6% from that news. Yeah, because it's hard to get back the client. So it makes sense. Look, a lot of people don't realize that even though it's only 2%, you say, well, why did it drop 6? Well, it's an overreaction, but on top of that, it's very hard to be able to replenish those customers. Very hard. And I think when you think about it, you know, the M1 chip and these manufacturers making their own chips is probably, these ARM chips is probably the way of the future. I'm not saying I want to own Intel into the new millennium of the next decade. I'm just saying that there might be an opportunity there from a perspective of it stabilizing. And in an uncertain market, stabilization is not bad. Look, I've got an M1 laptop as well, the Apple MacBook Air. It's all right. It's fast, but limiting would be what I would explain it as. So US oil, very good. Looks fantastic. It's continuing its way up. Do we have a chart over here? Here's one that we've got moving averages on. So let's have a look here at US oil. Go to the 2-hour chart. So the 2-hour 20 was the last touch before it came through. 1 hour 20 seems to be the current bounce zone. So as long as that kind of holds up, that'll be pretty good. But overall, I've got an 85 plan for it regardless now. And I wouldn't mind it to come back down here and allow further buying opportunities with conservative entries. That would be not too bad. Let's have a look at the Bitcoin market because this is pretty damn exciting. So Bitcoin on a massive run at the moment. You know I'm pretty bullish Bitcoin. I'm bullish on it into the November, December period this year. This is a very strong movement here from Bitcoin. We got plenty of different opportunities. We obviously saw it close above all the moving averages, get out of this 45K range, move towards that 48.5. You can go back over our weekly videos. I've talked about the exact same resistances. Then we saw it close out. I wrote an article about it yesterday, talking about it going towards the 52K range, and it looks like it is going to go there. This is very bullish. There's no doubt that you look at this chart and you think it's ramping. It's great news for the rest of the market. And if you miss this, what you'll notice on the right-hand side is that some of the other coins haven't gone as much. Like Cardano is sitting at $2.20. KSM, one of my favorites, is pretty cheap, really, at $3.36. And they're cheap because all the money is flowing into Bitcoin. All the positivity is about Bitcoin. And it's funny how this happens. Keep this in your mind. 2 months ago, Bitcoin was the worst coin in the market. Everyone said it was killing the planet, probably arguably can and does based on its mining. Everyone said it was the most useless coin in the market. Everyone was hating on it. Ethereum was going to kill it. Everything's going to, destroy Bitcoin, and Bitcoin sucks. Look at it now. It's outperforming a lot of other coins. It's kicking ass. It's got lots of money flowing into it. And really, I was watching a Ray Dalio meeting. And by the way, what is Ray Dalio talking about sometimes? Has anyone ever watched one of his most recent meetings? He's like, I think he's on a spectrum of just way too insanely smart or something. I was watching his meeting. He basically said nothing. he said very little with a lot of words. Anyone else watched a Ray Dalio meeting recently? I was like, what is he talking about? Bitcoin might be expensive still. Oh, I don't agree with you, Christoph. No, it's not bad. I don't think it's a bad coin. It's effectively a partial store of value. You can disagree with me or agree with me. I don't really care. But the way that you've got to think about it is the ecosystem. It's like the index. If you have this coin losing sentiment, because crypto is a sentiment driven trade, then it will crush the rest of the coins. And it hasn't transitioned away from Bitcoin yet. So whether you like it or not, if this coin's not performing, the rest of the coin market will not perform across the board. And right now it's performing very well. So our targets are set for over here, that 52 I've got, but could be 53. And if it breaks through there, obviously big news. And once this starts rallying, in general, you see the other coins follow after, as long as it stabilizes. Darth Vader says, I wonder if it will get back to an all-time high and if I should take a loss and hedge it into ETH. Yeah, well, I mean, ETH will start to move with it as well. I mean, you can see here, ETH's chart looks pretty damn fantastic. You've got a snap coming in here to get past previous resistances. Nice bullish hammer as well, and movement up. So very, very good. Fantastic stuff. So things to watch for the next session. US 10-year. I will not disregard this US 10-year. I think this is going to be the linchpin for the US 100 should it really want to sell back off. This is too important a zone to ignore it. We have way too much support becoming a resistance area, way too much random trade through this area as well. So we need to clear that zone to get us the bull side. We are optimistic. I do believe the markets will be higher than where they are here in only a few months' time. That's my personal opinion. Now, you might say, oh, Tom, 2050 cross. I think it's going down to nowhere land. We've certainly demonstrated in several ways that the weekly 50 on the S&P should be around the low point of this market correction, unless the Evergrande situation gets out of control. I'm not concerned about the debt ceiling in the US, but if we constantly keep seeing bigger and bigger credit crunch problems out of China, that can actually collapse the market. It is a real deal. It's like Japan in the 1990s. And people, again, disagree with me on that. I think it's very similar. Morning Dew says, I'd be careful with BTC. Still could see a major dump. Oh, yeah, of course. I mean, any cryptocurrency can get smashed in like 2 seconds. But overall, Bitcoin has looked good and it's been a pretty damn good trade the last week. Slobodan Zakowski. Sorry if I mispronounced your name. $4.99. Tom, you are helping me so much. Thank you. I am shorting oil, though. Quick scalp. Oh, my God. Look, I wish you the best, Slobodan, but be careful about going against the trend. I mean, you'll probably be correct. It makes some sense for it to pull back. I mean, if every article is being written about, well, I can tell you, actually. Let's have a look over here. Let's go to the news. Let's have a quick search here. Oil prices, oil spike, oil futures. How many more oil articles can we get? Only 4 oil articles. I want to see at least 10 oil articles. The more oil articles about bullishness, the more chance it drops that day. If you know what I'm saying. I wouldn't go against the trend. I don't know why you particularly are, but yeah, be careful in that strategy. If you're going against the trend, like let's say you're shorting this oil future, the only time I would really consider shorting it would be something like this. You got your peak, you don't really have a trough here, but you've got that kind of point. And if it gets underneath here, then you've got higher chance that it continues to weaken. But yeah, shorting against the trends, I wish you the best, but be careful over the long term. That's kind of like the way that a lot of people lose money, is going against the trend. Quick scalp is smart. Yeah, quick scalp is okay, but I wouldn't do it personally. PLTR, people are wondering if it's spiking post market 2.11%. God, this stock, man, it's just such a devil stock. Look, I've got a rule, and you guys know what it is. Don't trade crap that is less than a year on the market. And I would say, even though I know this is a slightly better one than others, it pretty much proves the point that you don't trade crap that's been less than 1 year on the market. It had that ramping, and then it's been very poor. I follow it because you guys like it so much, but if I had my way, I wouldn't trade it. And I specifically would be pissed, very angry. And the reason I wouldn't trade it is these 2 reasons. We get a short closure out. It doesn't continue to go down, which means it breaks technicals. There's a good trade here towards the long. It's a good trade here towards the long. But then over here, it breaks out above the all-important 2730 and doesn't follow on. To me, that's trash. I get very upset from a trading perspective when that type of stuff happens. And I would put this in my bin, and I would say no to you. If you want to invest, that's fine. But trading it, I mean, what's the point of trading something that doesn't act technically? It would just piss me off every day. I'd be angry at it. It's a waste of time. That might be a rant, but that's how you've got to look at it. Investment, different thing. Trading, trash. Rigoberto Sanchez, $5. What are your thoughts on Amazon 3,300 calls for Friday? Oh, it's too short. Too short. Also, I don't like buying a straight call. I think it's, again, a bit. How much does it cost? How much is the 3,300 call, Rigoberto, for Friday? Better be damn cheap. Otherwise, yeah, I wouldn't do it. Look, buying straight calls is also a recipe for disaster. Doing a bought call, short dating, you will lose. If you have 70% of markets generally expiring worthless, it's not worth it. Better off to put a spread in instead. Capture a zone. So if you want 3,300, better off selling off some of the top side and then just trapping in there and looking for something that's higher probability of success. Because if you buy a 3,300 call, you might need it to be at 3,400. You might have to pay, let's call it $20 to $30. Yeah, $20 to $30. And then if you pay that much, then you need it to do this to get like a pretty good payoff. Whereas with the spread, you might be able to trap it in here and get a very similar payoff for the Friday close. Spreads are cool. Go do our options course would be my suggestion. Too many communities love PLTR. Institutions need fake breakouts to stop make money. Yeah. I mean, investment. I don't disagree with them. There are very valid reasons, but the technical trading aspect of PLTR. Can you see why I get disheartened by it? It doesn't trade technically. I wish it did. It doesn't. Tom, can you please check TDoc for me? How low do you think you go? Do you see a bounce in the next 3 to 6? TDoc is, oh, it's going to need a good announcement. I don't know what it is about TDoc. I mean, other than the fundamentals, I think it's the management. I watched the meeting because I was pretty into this stock where the hell was it? Over here. I actually took a position. I got rid of it before earnings because I don't like taking them into earnings. And this particular, like, I watched the actual earnings call and I listened to them. I got to say, I was concerned and I didn't quite understand how they thought they were going to kick Amazon's ass and everybody else in the future. Yeah, TDoc is really just the way I look at it is this is a trend line down. You've got this previous support that's now been broken through. And until it gets back above here and back above the trend line, I don't have much faith in it, even at this 120. Is it a zone of interest? Not based on anything over here. I mean, you've got $100 of a zone of interest. 120 is just a key like just a psychological area. And then obviously you've got this $90-ish that it hit back in 18. It deserves to be seen as kind of a deep value play, I guess. But again, the market needs to see that TDoc is making ground and doing so at a cost-effective rate because it is not doing so right now. Mushroom Cat, $4.99. Tom, if you love DOT and KSM, you'll love Mother. Can you take a look at it? Thank you. I like ARURA and Akala. Yeah. ARURA and Akala. Not endorsements for them, but I mean they're also based on the dot or their DeFi dot. MOVR. I don't know if there's more history to it. Just on support. Very similar to the other coins. You basically just got a bit of a range here, waiting for Bitcoin to slow down, and you'd be looking for it to break through these 375 highs, 370 highs. Closure above there, and then it can start ramping back to your $500 target. Yeah, looks fine. Good support where it just has been around that 288, 300. Trapped in a full-on channel at this stage. Yeah, it's a coin, this one. That's right. DG says the TDoc chart has the middle finger pattern. Yeah. Gordon also likes the MOVR. I think you can TA this range recently. That would be fair. I'll draw between those bodies, get those resistance highs taken out. Massey says TDoc is trash. It's on life support. It's burning cash. That's what they're doing. Scott Morgan, $2. Given the past 2 weeks, NCLH looks really good. Let's have a look. NCLH, Norwegian Cruise Line Holdings. Yeah, that's really nice breakout. I think we've done this one before. That's a great pattern. Great pick down. And you would hope it has more in it. I mean, you look at this, fantastic pattern. Really good ascending triangle. Great breakout. Didn't complete. It should complete. And you've got the potential here for a lot more. I mean, I would probably, if I was taking a position like this, I'd be looking for that 3280. Maybe 32 flat, 3250. That's a good pattern, man. No doubt. Weekly, closed above, long leg doji. Yeah, solid. Maybe we'll continue to watch it. NCLH. Don't know anything about the fundamentals, but that is a solid pattern. How's Facebook looking for the TA? Sure, Burak, we'll have a look at that. Facebook is... I wonder what the... interesting. Pays to go out to the higher time frames. Even I hadn't done that yet. Looked at that weekly. Must admit, I don't trade Facebook that often. Geez, it's on not bad. That 320 was better than I thought it was. Pretty compelling. How much discount are we getting? 13 and 15 to the low. Yeah, it's pretty compelling stuff. 320, 322. It's a pretty good trend line through the base. And then obviously 300 would be more of a wick that you would hope would reject. Not too bad. So it looks like the futures here have continued to drop. If we go back over to the NAS, let's go to the 5-minute chart after the close. How does it look? Continue to drop off there. Wouldn't be surprised to see some weakness in the market. Wouldn't even be surprised to see it actually come back down to here around that 14.6 on the NAS, 14.580. And for it to maybe open the next session somewhere around here would be a pretty damn good little area for the next open. Bull side, you're looking for it to get through that downward trend line. And if we have a look at the US 500, we're looking for it to probably come back down to around that 43.30 area. So overall, things looking a little bit weaker. I would look at US 10-year very heavily in the next session. If that breaks out, pay attention to it. That can create a bit of a flash sell on the Nasdaq. I would really laser focus on this one here. Laser focus on US oil if it keeps dumping up as well. Because if it moves up higher, we get the US 10-year going higher. Both things could be negative towards the market overall. The VIX, I still would ignore this pretty much. Not much point trading the VIX at the moment. And then we have gold and silver. I'd still be staying clear of these charts. I don't like what they're doing. Dollar index bouncing, which is correct. It's come back down, hit exactly this previous resistance, becoming support. Let's take a look at the 1-hour chart. Oh, yeah. It's almost lightning bolted up. So we've got like a really nice 1-hour, 4-hour turnaround story. 94.10, close above 94.10. Absolutely. Could be fantastic. Yeah. Cool stuff. Finken 79 says, I don't expect the trend line to hold this week on Facebook. A lot of bad news. Yeah, but bad news. It's like, actually, speaking of bad news, what is it? What's Pete on? Yeah. How's that going? I guess I'm glad that I'm being vindicated for this one. This stock, I got to say, I never understood it. It reminded me of those midnight ads. And I haven't used the product. I'm sure it's much better. It's on support, but yeah, Peloton. Remember the bad news that came out? Obviously, terrible news about those poor children that got killed from it, but which I still don't know how that happened. But anyway, the market actually went down initially and then fully ramped up. So just remember your opinion about bad news or good news or anything, unless it's really bad. And Facebook's one is not bad enough. We've seen plenty of bad things happen about Facebook. It doesn't necessarily dictate price action right now. Now all big investors putting money on BTC free of taxes for now, like offshore better than the SP 500 and Nasdaq. I do believe that bigger investors are going in. Like even Ray Dalio was talking about, his purchase of Bitcoin. I watched that interview, as I said, and it was interesting. What did people say about Dalio before? Right now is a trader's market? Absolutely. Absolutely. It is a trader's market right now. Piton has one problem. Moat is not big enough. Too easy to get in there. Farah Muhammad says, trading course is great. Thank you very much. Yes, we do have a flash sale. Now, the flash sale is not actually live. on our website. So if you're interested in it, click the link. That should take you directly to the discount coupon. If you're interested in the Ultimate Trading Masterclass, it's literally a flash sale, and yeah, if you're interested in it, grab it because we only do that. Well, we don't do it very regularly. Matthew Harris, Australian $5. Is 34.60 a reasonable level to look at on BHP on the ASX weekly? So we're talking about an Australian stock, iron ore, one of my favorite kind of sectors. Was 34.60 a good level to be looking at? Yeah, around that 34.60 is a good level. So basically, it's a kind of middle zone. So if you were to, what am I doing? There's my draw chart. If you would actually take a look at the markets across the board, and you were to consider like BHP and ignore for a second what happened back here, because that was an anomaly, and you go throughout history of BHP, what you'll notice is that in this range between $40 and around $30, it sits a lot of the time. So it has its kind of like extreme movements out, and it has a very extreme movement down, which I don't expect it to do again. And yes, I like anything in this range, specifically around $35 is very good. Resistances, supports, very good supports, resistances, $35 is a very, very good zone. But I have already kind of started positioning myself in this, and it may say, well, Tom, that's a falling knife. You say don't trade that. Not a trade, guys. Different scenarios for different things. This chart looks hideous, and there's nothing here saying, well, I think I'm bullish, other than the laws of the average and your understanding of fundamentals / $35 to $36 being very strong. So yes, Matthew. Will SPY hit the 200 daily moving average this month, says Christopher? Look, we don't know. I mean, we need the SPY to close underneath 4,300, man. If you want that daily, I'll show you where it is. If you want it, the only way to hit the 4,300 is get underneath. Sorry, hit the 40 of the daily 200 is to get underneath 43. Underneath 43 is a big deal. There's a reason the market's fighting between the bulls and the bears here, and it's kind of trapped within the range because it's such a big deal. Like, people underestimate how big a deal a close can be. There's a reason we're moving to the close. Today, we haven't seen, we obviously saw a profit-taking target. Yesterday, we saw the close unable to get down below the big deal level. This is the power of the close. You might think, oh, this is not for me or whatever. Hey, when you see closures happen, it gets you the opportunity to make a really big decision that's very well thought out. 90% of my trading is at the close because you're waiting for the confirmation from Nasty Wall Street on what they're doing. And hopefully you guys are starting to put together the manipulation throughout the day, throughout the session, throughout the different times of the session, and obviously what happens next. But yeah, underneath 4,300, high chance that you get your daily. As long as it holds above here, though, it's not going to happen. Tom, can you have a look at UPST? I'm worried. Sure. Upstart. Okay. It doesn't look like a bad level. Daily 20 moving average, previous resistance, bit of support. 2 hour looks a little bit worse. You want it above the moving averages. What is that price? Close above here would be key, 305. I don't think it's a terrible chart. You don't want it underneath your daily 20 though. And your weekly is probably quite far away. Yeah, it's a very aggressive chart. I would have descaled a little bit from this one. You're so far away from the weekly 20. But at this point, you're just sitting on the daily 20. It's a very aggressive trend. Has to hold here. Tom, can you please cover TA for XBI, the biosector area? Yep. Due for a bounce, you think? Yep, I agree. I think this is going to be a strong sector for the next couple of years. Personally, this is a sector that I see value in right now. So yeah, it's around the support. The first support's around here, and the second support's obviously deeper. That support that was picked up in August and picked up in May. So I got very bullish around it around this period. Obviously took some CRISPR stocks, slight profits on those, and then I'm looking for repicks for a future of pretty green, I think, from the biotech sector. The biotech sector is crazy. It's not for the faint-hearted investment. You've got to be prepared to wear 30% swings. I mean, a good example here would be a stock that's already rebounded fairly heavily. Where are we? In Edit. Edit. Oh, wait a second. This one hasn't rebounded. Edit did a eye thing. It's basically like a CRISPR injected in the eye. And I don't know why the market expected a miracle straight away so early in the trial, but they do always. And then you can see how big a negative it is. So as you get more trial information, and if this really is going to work, I mean, this could be a massive position. I mean, you've seen where it goes to. It went to 70, now it's 38. I mean, this thing got crushed. But that's the problem with these medical stocks. Like, when you don't buy one, you buy a smattering of them, because you don't know, firstly, which one's going to be correct. And when you get payoffs, the payoffs are extreme. But at the same time, the risks are extreme. XBI above 120. It's support but messy. Let's have a look at XBI. Oh, the biotech, yeah. Have a look at XLF. Just want to check this out. XLF still not above the resistance of 39. We'll keep checking it out. Aussie dividends are bonkers. US has nothing even close to it. Correct. We have the best in the world. Greatest market in the world for dividends, Australia. Come to Australia, guys. Best market for growth, the US. Cool. All right, guys. Well, thank you so much for joining us for another close. Stories of the day to watch. US 10-year. We'll bring out a video later discussing all the options walls. Of course, US 500, you've got the key resistances and supports. I think we talked about that pretty keenly and closely here in the session into the close. We didn't really get too many great stocks that were finding awesome opportunities near the close today where they're breaking through a key resistance or anything like that. We mostly had things hitting roll reversal or resistance themselves. But I do think even at the start of the stream, we saw that drop off continue because we recognized the profit. Remember, trade the TA, trade what you see. I don't care about your opinions and you shouldn't care about mine. We trade what we see here on the channel and we invest in what we see and we invest in optimism. And if I'm going to leave you with one story, it's just always be optimistic in the markets. I'll move this over. Here it is. The stats don't lie. The stats say be optimistic. Someone pointed out to me, they said, oh, but Tom, check out that May 1991, 7 months in a row, negative 4.8, and you came back in a year and it sucked. I don't consider a 6.5% year a bad year in the markets. It's actually a normal year. And I also think that you might want to consider something here. And that is what happened in 1991, 2001, 1991. 1992 happened, 1993 happened, 1995 happened, 1996 happened. Crazy big gains. In fact, an incredible growth period for the markets, and what really changed Warren Buffett's wealth quite a lot. So when we think about it, if we're going with a Cathie Wood approach of optimism in the next couple of years in the markets, which I tend to go with, then we have this idea that the market can go up. And remember, a discussion about bubbles in markets, and you might say, well, but I think the SPX is in a bubble, or I think the Nasdaq's in a bubble. Let's put this into consideration. Okay, so this is the weekly. No doubt it's very aggressive, okay? It is very aggressive. 2,000 to 4,000, almost, 100%. Let's call it from this period here, or even if we call it from 16. So basically 100% from, let's call it 15. So that's pretty damn good gains. But if we put that into consideration of real bubbles when they occur, never forget what a real bubble looks like, guys. And they go nuts. A real bubble is crazed vertical. Here is a real bubble. China market, 2006, 1,245. 2007, 6,000. A 600% almost increase. We move over to the next bubble, 14, 2,000. By the time 15 happened, 5,200. So whatever you think can happen, put it back on the door and say, hey, it can happen a lot crazier than you believe. If you want to go with ASX 200, another market, let's have a look at STW here. We'll use the code STW. I just want to put this point into your mind. If you're calling bubble, it's going to take a lot more than what you believe. $28, okay, 2003. By the end of 2007, it was $66 on crud companies. And these were tons of rubbish here. Companies that were literally just listing with no earnings and all sorts of things. If we go and look at the dot-com bubble and we think about what happened there, so let's put it all in perspective. Here we are now, definitely crazy. That dot-com bubble as well, and this is the SPX, wasn't as affected. But if we look at the NDX, and we think about what happened here, 1,200, okay, 1998. 2 years later, 4,750, a 200 to 300% increase. So we're not talking about that, even though it's insane, okay, we're actually not talking about an increase like this increase over here is a raw percentage. We're just talking about a hell of a lot higher price and a way larger market. So it's pretty nuts. PK Summon says real bubble is 2000, 2008. Well, yeah, I think even in the US, the 2008 bubble was, even though it was pretty brutal, the actual market didn't show anywhere near the gains across both markets in comparison to the Chinese market, in comparison to the Australian market. You know, this rebound here into the crash, I mean, this really was not bubblicious looking stock. This wasn't even bubblicious stock valuations. This was actually a massive problem in, of course, the property market, which ended up leading onto everything. The bubble was really here. Cool. So yeah, all right, guys. Good luck over the next 24 hours. Let's see how this thing plays out. Let's see how the US 500 reacts to that resistance. And as we leave it here at the close, we've seen just weakness since we opened up. And we were correct. So well done to you guys. You had big brains. And so far, you have been absolutely correct about the resistance. Well done to you. Quickly read these comments. Tom, can you please talk about the masterclass? How long does it last? What do you cover? The masterclass is self-directed. There's heaps of information there. If you go to our website, fxevolution.com, Gordon, plenty of info there, man. And basically, it covers everything. It goes all over the technical analysis into from beginner to intermediate to advanced, then does a bit of fundamental analysis, talks about economic cycles. It's all there. And yeah, I think it's pretty damn good. It's a culmination of 10 years of pretty hard work on it. Awesome. All right. Ciao, everybody. You have a great day. If you're interested in it, take advantage of that discount right now. It's what better time than to learn to be a trader over the next couple of years. We've got increased volatility, a super exciting market, and I believe an opportunity to possibly change your life if you take into consideration you learning it. Don't just follow some other person's opinion. Become the master of your own trades, your own investments, your own philosophy, and hopefully you find some value in these streams. Bye for now, guys.